Good afternoon, everyone. Thank you very much for joining me. This is the NFP Live Trade. I want to stress it's going to be a live trade on a live account. It's not a live trade on a demo account. It's a live trade live account. My name is Russell Shaw. I'm the Senior Market Specialist at FXCM. And my email address is rshaw@fxcm.com. Today is Friday, the 5th of February, 2021. And thank you, everyone, for joining. Ray, Vedran Howard, nice to have all of you on the call, and everyone else. Thank you very much for taking the time. Just going to bring up the disclaimer. So the first one will be the high-risk investment warning. So I think most of you would know I popped my shoulder, on Wednesday night. So don't ask me how. I honestly wasn't doing anything strenuous. And I'm in a sling, so I'm a bit clumsy today. So you're just gonna have to bear with me when I'm using the mouse. It's a little bit slow, a little bit all over the show. Nevertheless, we're going to try our best to trade the non-farm payroll. Generally, I want to be open. It's not really a news event that I would go and trade, except for the fact that I think it's a terrific educational and learning experience, and I think by and large we've had a pretty good time trading these. I mean, we've done these a fair few times now. Last time we did it was back in January. I just come back from leave, and actually that trade ended quite quickly. It hit our stop loss, and we were stopped out very, very quickly. So hopefully we can do better today. But we're going to set some targets for it. We'll set some targets, and if we hit those targets, we'll consider it a success. And because it's not something that I sort of would normally trade, you know, I like the swing trades. The position size here, I want to be very clear. The position size here is relatively small compared to my normal position. So I want you guys to understand that. So it is a live trade. It's on a live account. If I make pips, I make real money in my live account. If I lose pips, I lose money in my real account. So, but the position is fairly benign. Okay, hello Ajitha, pleasure to have you on the webinar. Thank you very much for joining. Let's just take a look at our references. So MarketScope 2.0, TradingView, and Forex Factory. So let me just explain to you that the Forex Factory is where we'll get our numbers from. So I've got I'll get the numbers before they are on Forex Factory. How will I do that? Now I've just got Twitter open on another screen. So usually I'll get the numbers coming through on Twitter. They come through about maybe a minute, maybe 30 seconds before. But the US dollar is what I'm going to monitor on TradingView generally. It's because we're on my live account, and as a FXCM employee, because the US dollar is a FXCM construct, they don't give me access to it to trade as an employee. I'm not sure of what the compliance regulation is there, but I want to be very clear. I feel that the FXCM US dollar index is superior to the DXY, because the DXY has got a heavy weighting towards the euro, whereas the US dollar is an equally weighted index. So we're going to take it. We'll monitor the US dollar on Forex View. Sam's asking which Twitter. So I'm subscribed to a number of services here. I'm not sure who comes out first. Live Squawk might be the first one. I've got a link to some traders. So Live Squawk, definitely FX Street, Forex Live, all those type of. So when it breaks, Sam, just remind me, and I'll let you know which services I've read first. Zero Hedge is a phenomenal Twitter account to follow. So if you guys follow One Financial account, Zero Hedge ranks right up there. Does that help, Sam? Okay, cool. I'll let you know which one I'm reading off first when it comes through. Let's just draw up our rules for success. Let's just draw up our rules for success. So the rules for success are either plus 20 pips, or minus 20 pips. Okay, that would be a success. Or so I don't think we'll get a full 20 pip loss. We may, but generally we're going to try and we're going to try to trail the stop up. So if we trail the stops in a loss that is is less than 20. So a loss that is a loss that is less than 20 pips would also be regarded as a success. So plus 20 minus 20, that's a 1-for-1 ratio. And I'm not targeting 2-for-1, not on this. This is pure scalp here. So 20 pips to minus 20 pips with the idea that we can try and get a loss in as quickly as possible. How are we going to trade this? We're going to trade this quite simply is we're going to use our 1, 2, 2, 3. Oh, see, there's my left hand being a little bit weaker than my right. 1, 2, 2, 3. So we want to try and identify these patterns. We're going to be trading euro US dollar, and once we identify the pullback, if we can, we're going to try and take the next impulse, either up or down. It doesn't really matter. It's an emotional trade. It's the market running on emotion before it settles. So we're going to be in for as long as these parameters hold. We've got 3 minutes. We've got 3 minutes until the news release. Do you plan to trail the stop loss dynamically or statically? I'm going to do it by eye. So you'll see then we're going to start off veteran with a 20 pip stop loss. And as the peaks and troughs form, if they form in my favor, I'm going to use the peaks and troughs to visually start trading the stop loss. So you'll see exactly how I do it. But it's certainly not dynamic. It's not dynamic. This is going to be, everything is sort of fairly manual with this trade. Does that answer your question? Okay, cool. All right. Any other questions? Go ahead. These are our parameters. Let's just take a quick look at Forex Factory. So Forex Factory here is telling us that they're expecting 85,000. Now, I'm not sure if we're going to beat that or not, but on Wednesday we know the ADP, which is the small company, the smaller cap employment sort of measurement, really beat quite significantly to the upside. So we'll see if that number sort of transfers through to here. The unemployment rate, this is quite surprisingly low, but I think it's low. I think it's low because the participation rate has probably come down there. So I'll just have to check that. What I think is very important, guys, is this average hourly earnings. So we've seen yields increasing. We discussed that this morning. We've seen yields increasing. So I think to justify those yields, the average hourly earnings should come through with a beat. If they don't come through with a beat here, I think it might knock the US dollars. Let's just go back. Let's go through the chart. We've got less than a minute here. Let me bring that up. All right, so what have we got here? We've got a hourly in the top left, 5 minutes on the bottom left, a 1 minute on the right. I've added stochastics in for this trade. We don't usually have stochastics, but maybe it will help us. And let me just go through to my okay, so we've got 25 seconds now. Any other questions? Go ahead and type this in. We'll see how the trade goes. It might take us out pretty quickly like last time. I hope it doesn't. But if I go silent, don't worry, I'm still here. I'm trying desperately to think about how to trade it. So, okay, 3, 2, 1. Okay, let's see what happens here. There should be some sort of spark or wow, so there's a big upwards movement in the euro. Look at that. All right, so let me see what's happening here on Twitter. All right. All right, so now there is a bit of fading of the trend. We're not in yet. Okay, we're not in yet. We're waiting for. So we probably want to take euro long. We probably want to take euro long. Let's just payrolls 49,000, so they're way below expected, according to Zero Hedge 105,000. So the fastest there, Sam, was Forex Live came out 49 versus 105 expected, and then Zero Hedge was the next one out. So we missed. All right, let's just go to let's go through to our Forex Factory, and let's just refresh here so we can see what's going on. So it looks like a dollar may be in for a bit of a pasting here. I'm very eager to see what the average hourly earnings was. Let's just see if we get that. Okay, so you can see the inflation is really, it's bad. So yeah, it looks to me as if dollar is going to get knocked today. The unemployment rate's down. That's not necessarily a good thing. It's probably because the participation rate is decreasing. Okay, so less people involved in the workforce. And then the non-farm is really disappointing. Okay, I think we're probably looking to trade dollar short here. Let's see if we can get in. Okay, so we don't want to chase. We want to see if we can get in on a pullback. Okay, so let's just keep this. All right, you can see this is the 5 minute, a big spark up on the 5 minute. Let me just see if there's any questions that have come through. Why are we going to short the US dollar? It looks as if the inflation rate is missing there. Raj, did you see that? Did you see that the inflation rate's missing? Let me just show you. You see that the inflation rate's missing, and the amount of jobs created is lower than forecast. So think about it. The central bank's not going to be happy. Sorry, it's KD. The central bank's not going to be happy with this KD. So they're going to have to be thinking. They're going to be thinking of a loose monetary policy, or the market's going to be expecting a response of a loose monetary policy. What's loose monetary policy going to do to the dollar? Should theoretically knock it down. Does that make sense, KD? Does that make sense? Okay, Russians, but hang on a second. I think the EMA is positive, but that's great. That's great. So we want to go long euro, short US dollar. So that's in our favor there, Raj. You see that? It's in our favor. Okay, here's the response downward. So we may get in here shortly. Let me just try and set up my screen here. It's getting pulled down. Yeah. So I think we're gonna try and get in on the pullback here. Give me a moment. We're not in yet. I'll tell you when you'll see when we go in. Okay, you'll see when we go in. All right. All right, we're just waiting 1 minute. This looks like a pivot point reversal that's locking in. Let's just see if it's a pivot or a reference candle, bit of resistance there. Okay, a little bit. I'm still here. I'm just watching the price action, guys. Just give me a moment. Ah, there we go. Just needs to close. There we go. Nice. Okay. We're long. Okay, we've gone long. You can see the stop loss is 20 below us. Now we're going to monitor. Okay, now we're going to monitor. I haven't put the limit in. Let me just put the limit in here. Okay, so there's a limit 20 pips ahead of us as well. Let's keep an eye on that. Now, what's nice, I've added the stochastic, so we'll just measure it. I like the fact that, we're on the minute chart here. The minute chart here is going to be very, very fast. It's very, very quick. So, you know, we're very close to price action. It's very erratic. The likelihood of sustained trends on the minute chart are very remote. So we're just going to keep an eye and see if the stochastic can stick out in the upper quintile. Now, really, we want to see if the 5 minute, this chart can make it through to the upper quintile. If it makes it up to the upper quintile, then we've probably got a nice momentum behind us. You can see that we've got a 1-for-1 here. What's interesting is we've got R1 right above us. That may act as resistance, so we might have to take profit a little early. Let's just, if we get there, I'm going to count my chickens. I'm just going to open this up. Just, it's easier for us to see. We're looking at the minutes chart. Okay. Now, just to tell you about my entry, 1, 2, 2, 3. Now, what I did was I waited for what we call a reference candle reversal. Here was the reference candle reversal. And the reference candle reversal is necessary if there's going to be a swing. It doesn't mean that there will be a swing. It's just necessary if there is going to be a swing. Okay. Let me just see if there's any questions there. If there's any questions, just go ahead and type those in. Our stop is in. What we're going to do is we're going to try and we're going to start pulling the stop up fairly short soon. Okay. Raj just wants clarification on the reference candle. Here's the reference candle, Raj. Okay, it's got the higher low to the left. Here's a higher low to its right, and here's condition 2-3. Takes out the reference candle's high and closes above it. There was the entry. So we're always defaulting back to that reference candle. Always defaulting back to those 3 conditions. You with me there, Raj? Okay, excellent. All right, so we've got this coming back now. Let's hope we can get some sort of reversal upwards. If we can get a reversal upwards, I'm going to start taking my the stop loss up. Okay, I just hope there's a bit of volatility. What tends to happen with these non-farm payrolls is the initial impulse is the volatility, and then what we've seen quite a few times, it goes laterally. So hopefully we get some nice push this afternoon. Okay, so Raj, here is a potential another reference candle forming. You see we've got the lowest low here. This is the higher, there's the higher low. Now we want to see if we're going to get another higher low here. I don't know if we will or if we won't, but if we get another higher low and it moves on up, you know, then we've got a trough, peak, higher trough, higher peak, higher trough, looking for the next higher peak, and we can start moving our stop loss up. Okay, so that's how we're managing it, but it looks like there's just a real decline in the volatility. Let's just keep watching that. I'm just zooming out a bit. I'm going to start drawing in some references. Just bear with me. I'm using my hand with the sling, so it's a bit clumsy. But what we got here, okay, 1, 2, 2, 3, okay, 1, 2, okay, 2, 3. You guys see that? Now we want to see, are we getting another 1, 2 here? And if we get this 1, 2 here, we're going to start lifting the stop loss. Hans, can you just email me that question? I'll get a representative to call you to fix it up. Just send me an email. I'll get a client services person to. So he's just asking how does he make the layout, the 3 charts? So they're still there. So we're still here. Okay, you can see we've gone back here. The 5-minute chart. We need this stochastic to get up here. Okay, with the 5-minute stochastic net not getting here, you're going to be in a bit of trouble. Okay, so it's important for the 5-minute stochastic to get here. Okay, so it's quite obvious as well on the 1 minute chart that there is some sort of resistance here. Okay, so we've got a resistance point here. Let's just make this red and shade it in. So there's a bit of overhead resistance that we're dealing with right there. All right, just a little bit. We just need a little bit more bullish power. Okay, it's attacking that resistance again. You can see now that it's being pushed back. So there's certainly some sellers that are sitting right on the 120 area, right? So we're right on the sweet spot. Here's 120. It's a psychological resistance area. So there's some selling that's coming in there. Okay, let's just hold it. Just be a bit patient. What account percentage is the stop loss impact? Is it 0.5%? Veteran, it's less than that. Okay, as I explained in the beginning, this is a very small percentage, so it's less than 0.5% impact on this account. I have, by the way, concurrently got an Aussie position on. Okay, so the Aussie position, I'll just put it on. So this is my live account. Okay, you can see, so we're up 20 pips. So this is a normal position size here, but I'm not trading this. I'm not trading Aussie on the non-farm payrolls alone. And I told you guys I was long Aussie this morning. So that's a considerably heavier position. We go through to the euro. Okay, we go through to the euro. We just doing this purely educationally. Okay, all right. All right, now this is interesting. So we've got a resistance ahead of us. We've got a resistance ahead of us. It looks like we've got a support below us. So we're going to just make this green as well. Okay, so let's just keep an eye on that. So you can see that we've hit we've hit resistance 1. Here is support, resistance, support. Support seems to be holding. Now we haven't made much headroom here, guys. We're only 2 pips. I mean, it's a real nothing trade, is it? It's a real nothing trade. So we just need the volatility to expand. We need the stochastic to stay in the 80 area. Let's just go through to our 5-minute chart. See this 5-minute chart, it's very important that we get to the upper quintile in the 5. If we don't get to the upper quintile, the chances of making our target are slim. Okay, let's go back here. All right, take a look at this. Okay, Vedran, take a look at this now. No, we're getting rejected. If we can beat this resistance here, I'm going to start moving the stop loss up. Yeah, so PS is saying there was a big move on the US Canadian. So the reason that there was a big move on the US Canadian is because there was job data on the Canadian as well. So you can see you had your job data here. So I purposely didn't trade US Canadian. I purposely didn't trade it. It's too much information to think about on a spur of the moment trade. It's too much. So which one's going to have the bigger pull? Here's a big miss in Canada. Here's a big miss in US. So the information there is just too much. So I purposely PS didn't trade that one. It's just because it's too high risk for me. So I hope that explains it. It's not to say that it's not tradable. Clearly it is tradable, but I think people need to be really savvy to trade that one. All right, let's just carry on with these. PS, does that answer your question, or the comment sort of makes sense to you? All right, let's just keep this here. All right, we're still in this range. Okay, we're still range bound, yeah. Okay, let's just extend this across. Extend this across. There we go. Just need a push. Need a higher push. Gee, it's very slow, very slow. So we're caught in this range, and you can see every time we're hitting the 120, Every time we hit that 120, there's some sort of selling. But if we can just break through it, then it actually becomes psychological support. Okay, there we're pushing. That's good. Okay, that's good. That's good. There we go. All right. Now what we're going to do is we're going to start drifting this up. Okay. I'm putting it right here. Now why there? Okay, why are we popping it here? We're popping it here because here's the last price support. See that, veteran? So I'm doing it by eyeballing it, but I'm being quite sensible about it. So it's just below this low here, but I'm giving it some room. I'm giving it some room to breathe. If it hits this, okay, it hits it. Nothing we can do. That's trading for us, but we're off our 20 pip. Okay, so we're going to have, if we do get stopped out of this, it's going to be a considerably less than what we originally planned. Does that make sense there, veteran? Who's reacting to the employment news that has the actual power to move it? I think that my opinion there, veteran, is that the trading floors are very, very active at the moment. They've bet heavily for and against, and now I think that they are actively involved. So I think the big guns are actively involved here. Okay. Yeah, the Aussie seems to be running as well. So the Aussie I can see now is considerably higher. So that's cool. All right. Now we're pushing. We're 15 pips. Okay, there's a good move here. So what we're going to do is just wait for the next. We're about to hit our limit here, guys. We're right there. We're right there. Bang. Come on. I think the spread got us. All right. The spread got us. Let's just hold it for a moment. Okay, now we're going to move this up. Okay, we move it up to the next support level. Okay. And let's see if we can get the, see if we can beat the spread there. Okay, we just about break even. I think we're less than a pip away from each other on the stop loss and the entry. GA, this is one of those times you can actually pull your hair out because you actually hit the limit, but the spread keeps you out. So the spread kept us out. Okay. All right, let's have another crack at this. All right, let's just go through to our 5-minute chart. Okay, we still need to get here. Okay, if we get here into the upper quintile, we're going to make some cash. What's happening is it seems that this this pivot R1 is probably influencing some resistance. Let's bring back our 1 minute. Let's see if we can have another crack at it. And you can see, look where the power is coming from. Okay, this is where the power is coming from right now. So if this stochastic drops below 80, then we've come so close so far. But we're right there. Let's see if we get some bullish action, some bids coming in. Yeah, so it's just a bit. I think what's happening here, Andrew, is we at this R1 level here. We're at this R1 level, so just be cognizant of that. Raj says he always hits his target and never takes, but that's the spread, right? So we didn't cover the spread there. So you need to hit your target and cover the spread. Okay, that's why we didn't. So we're very close, very close. Okay. So what I'm looking for here, veteran, is the next higher trough, and then I'm going to push my stop loss up again. So if we get another higher trough, I'm going to push this up, and then our stop loss is in profit. Okay, so let's just keep an eye on that. You can see here the stochastic just starting to falter a little bit. So we've got to be very, very careful here. Okay, the speed has significantly slowed. Let's just keep an eye on it. It's 20 minutes since the release. Okay, now I'm trying to look for a pivot point reversal here. If I get some sort of reference candle here, we're going to push the stop loss up into profit. Just really struggling here, you guys. Really struggling. Let's just keep an eye on it. Let's move this across there. Okay, there we go. Just a little bit more. There we go. A little bit more. What we're going to do now? So we're going to move this into profit. We can't make a loss now. Okay, we can't make a loss now. The stop loss is above our entry, so we've got a free trade on. We've got a free trade on, and you can see this looks like it's the next higher trough. Okay, let's just veteran asking, do candlestick patterns actually work? Because different time frames for different candle patterns. My answer to that, veteran, I myself wouldn't classify myself as a somebody who is a candle enthusiast, but you can see the I guess the ranges of the candle are important, and just the sentiment behind the candles. If you talk to me about 2-3 crows or whatever it's called, I'm of the opinion that probably doesn't work. But if that answers your question, I'm just going to pop this up a little bit more. Okay, so now we're playing a real dangerous game, but I think that this higher trough's locked in. So I'm hoping that we've got now a decent stop loss. Can we hit our profit? Veteran, does that answer your question? Just let me know. Oh, we're going to get stopped out here. Oh, okay. Taken out, guys, for a 10 pip profit. Taken out for a 10 pip profit. And I think it was a good exercise in just our stop loss management. And I hope you guys enjoyed that. Let's just see the comments here. Russ says on an absolute basis, we actually, well, we moved it from a 20 pip negative. We moved it from a 20 pip negative, Raj, and pushed it all the way to a 10 pip positive. So yeah, good point there. All right, let me just see the comments here. Hans says nerves. Okay, cool. Why did you use 20 pips? Say rather 30 pips, Sam. You know, Sam, 20 pips, I'll be honest with you, is more just a, I guess, a nerve thing. You know, trading the non-farm payroll it's nerve wracking. Having an audience is nerve wracking. So 20 pips, I think is a good sort of a good ratio either way. We could, I suppose, put 30. You know, but maybe next time we can discuss it before. Maybe we can discuss it before. Okay, Robin likes it. Thank you very much, Robin. Michael likes it. Thank you. Okay, veterans testing the candlesticks. Kubus made 15 on euro US dollar. Phenomenal, Kubus. Love to hear that. Really love that. Andrew, Okay, brilliant. Andrew says we can afford a beer tonight. Phenomenal. Can we use the ATR in any way? We can discuss it. You see, the problem, I think, Sam, with the ATR, I think the problem is, you know, we've gone in very close. We're very close to price now. We're like on the minute. We're very close to the tick. I've got to think how we can use ATR. And I think that the ATR is going to change nature as soon as the announcement's made, because it becomes more volatile. So it may do us a disservice. Yeah, but it may do us a disservice. You see, we had this big jump over here, right? We had this big jump here, and it's been flat for the whole day because everybody's been waiting for the ATR. So we may do ourselves a disservice using the ATR, but we can try and experiment with that. We can try and experiment with that. 15 pips on Euro, 20 pips on Aussie. Nice, Ray. Love hearing that. That's phenomenal. All right. Thank you, Gurdie. Appreciate it. Can we look at the FTSE? You can take a look at the FTSE. And you can see, and it did go down. So that's why we kind of methodically moved up the stop loss, so that we trapped in some profit there. So we did trap in some profit. The FTSE, you see, the problem with the FTSE at the moment, Raj, is I don't generally know how it behaves on the non-farm payroll. I'm going to give you my theory on why I think it might be behaving a certain way. So I think that it's behaving a certain way. It's very flat. It's very flat. It's very flat. Here is the movement down. It's very flat. Let me give it some thought. Look, I think that the Euro-US dollar is a good pair. It's the most liquid instrument, I think, in the world, definitely in Forex. So I think, guys, what's interesting on the hourly chart is, and I was concerned about this, but it hit the R1 resistance, and it just never looked like it was going to crack above it, did it? So it's coming right back down. All right, guys. I think what we can do is we can wrap up here. I am glad. I think that you guys enjoyed it, and we'll do it again next month. So thank you very much for your attendance. It is superb as always. Thank you for participating. If you'd like to join me, the US Open is in the next half hour. Otherwise, I'll speak with you on Monday. Thank you very much, guys, and chat to you soon.